Alright, what's up YouTube? This video is going to be short and sweet. It's going to be about how I use fair value gaps to determine order flow and to get a high probable setup. So this example comes from last week on Thursday. As you can see, we opened 9:30. Open, go down, go up, back down. But what does this mean? Because I don't have these gaps marked out. There's a fair value gap between here and here. We invert it with the 938 candle. Okay, that should tell you, okay, bearish order flow could be incoming unless we have a higher time frame bullish PD array that could be respecting. But anytime, this is my favorite setup, anytime that we invert a fair value gap and make one at the same time, as you can see, we made a SIBI while we inverted this BISI, or basically we inverted this bullish fair value gap and made a sell side, a sell side PD array, a sell side bearish fair value gap, and then that could have been your entry there. Boom, stop above here, the bodies, because it could always flip up, but if anything, I would put it at the top of the middle candle. But you could have got in here at 504. That gives you a quick 50 points. Or if you held through a little bit of drawdown, you could have got out here, or whatever you wanted to do. But just watching how price reacts to these fair value gaps will tell you everything you need to know. And price runs what? How does it run? From internal to external, meaning what? Meaning, okay, if we disrespected this fair value gap and we haven't took out a swing point, which this was the nearest swing low on this example, we didn't take it out here, so we could hold for this swing point to be taken. And as you can see, it ended up taking it not too far later. And it could have been, I don't want to mess it up, I should have drew the chart out, it could have been a daily low down there or something. But you just kind of stack confluences on top, different time-based liquidity levels as your targets. Or you could do a flat 1 to 2, whatever comfortable for you. If you're having a hard time and need some confidence, the 1 to 2 route is, if you can get 1 to 2 every day, one time a day, 3 days a week, you'll be golden. Yeah, and I'm getting back in it, trying to do the same myself, where I have to trade Asia. It makes it kind of hard sometimes, but I just want to get on here and really emphasize price running from internal to external, meaning we disrespected this gap. Where should we go? We're likely to take out at least the swing point after you invert. So if you invert it here, that's when the light bulb should come out and say, okay, bearish order flow should be incoming. Alright, we come up. You could say this is the OTE, optimal trade entry, or you could say we inverted it and I think we're going to respect this fair value gap and get in this wick, and you would have went from 500 to 470 real quick, a quick 30 points, and you could have been out at break even, took some partials, or 30 points is a good trade. Or if, say, you held from 501, it goes up, you get about 15 points of heat right here before it, boom, goes down in your favor. But this is just a good model, and it's really my favorite setup, is seeing displacement, then get inverted with displacement, or real quick, like the reversal pattern, balanced price range, whatever you want to call it. When it goes up, takes liquidity real quick, then boom, comes back, inverts it, gets in there, and you continue to go down. So the biggest takeaways from this is just watching how fair value gaps react. Are we inverting them or are we respecting them? And knowing that price is going to go to internal to external, meaning fair value gap, to swing low, or if we were bullish, we would expect it to take out swing highs. And then are we manipulating lows? Or are we displacing through lows? Like, we're making all the sell side right at this low. So this is a really good liquidity level to expect to be broke. Anytime you see one, two, three, 3 or 4 taps around the same level, you know it's coming. And then as you can see, as we go up to the upside, right here, fair value gap, inverted with a fair value gap. This is going to be your breakaway gap. Okay, then we go up, come down, and as soon as you see this right here, I would be getting in. You don't have to, this is scary when it drops down real fast, but look at this right here. Change of state of delivery right here. This consecutive down close candles, go up, we come down, touch it. That could be another entry. After the first swing high is taken, we're expecting that order block to hold. Boom. What's it do? It holds. We go up. Boom. There's opening price. And look what it does right here. It comes right down to it. Boom. Hits it before going to the upside. So there's multiple ways to get in. This is just a quick example before I head to work of kind of how I look at order flow, how I use fair value gaps and how I use fair value gaps to look at the market, to understand the order flow, and then to see, are we manipulating or displacing through swing highs or swing lows, and trying to make a probable decision based on that. So I appreciate you. I hope this helps somebody. God bless you, and have a good day.